Good morning, everyone. I'm Harpreet Kapoor, the moderator of this call. Thank you for standing by and welcome to second quarter financial year 2021 earnings conference call of ONGC Limited. For the duration of the presentation, all participants' lines will be in listen-only mode. You host the presentation. So I'd like to hand over the proceedings to Mr. Subhash Kumar, Director Finance, ONGC. Over to you, sir.
Good morning, ladies and gentlemen. I am Subhash Kumar, Director Finance, ONGC, and on behalf of ONGC, I welcome you all in this ONGC earnings call for Q2 and H1 FY21. Thank you all for joining us on the call. I am joined here by my colleagues, Mr. Anupam Agarwal, Chief Corporate Finance, Mr. Rajiv Kumar, Chief Corporate Accounts and Financial Reporting Services, Mr. Binod Hallan, PGM Finance, Mr. Rajrishi Gupta from Corporate Planning and Strategy, Mr. Sanjay Bharti from Corporate Accounts, Mr. Chaturvedi, Chief Commercial, Mr. Nirmal Kumar and Mr. Chandrasekhar from ONGC Videsh, and Mr. Prakash Joshi from Investor Relations side. ONGC has compiled its financial results for the quarter and half year ended 30th September 2020, which have been reviewed by the statutory auditors. The financial results have already been released on 13th of November 2020 through the press note and sent to the stock exchange. They have been sent to the analysts who are there on our mailing list. There is a brief synopsis of the results. The company has earned a net profit, that is profit after tax, of rupees 2,878 crores during the second quarter FY21, as against rupees 6,336 crore during the second quarter of FY20. This is a decrease of rupees 3,458 crores, and in percentage terms, this decrease is about 55%. However, there has been a substantial increase in profit after tax in Q2 FY21. That's increase of rupees 2,382 crores. That is increase of, in terms of percentage, 480%, vis-a-vis Q1 FY21, mainly due to higher sales revenue and other income during the second quarter vis-a-vis first quarter of this fiscal. The profit after tax for H1 FY21 has decreased by rupees 8,942 crores. That's a reduction of around 73% from the profit after tax of rupees 12,316 crore in H1 FY20 to rupees 3,374 crore in H1 FY21. The decrease in net profit during the current quarter and H1 21 as compared to the corresponding profit of previous year is on account of lower sales revenue, mainly due to lower crude prices and lower gas prices as well, and the lower other income. The sales revenue for Q2 FY21 has decreased by 7,537 crore rupees. That's a reduction of 31% at rupees 16,846 crore as against rupees 24,383 crore in the corresponding quarter of the previous year. The sales revenue in the current quarter has decreased mainly on account of lower sales revenue from crude oil by rupees 5,508 crore, natural gas revenue by rupees 1,959 crore, and lower sales revenue from value-added products by rupees 345 crore. There is reduction in Government of India share of profit petroleum by rupees 275 crore from 565 crore in Q2 FY20 to rupees 29 FY21. The decrease is mainly at CBOS2 block by rupees 211 crore. Similarly, sales revenue in H1 FY21 has also decreased by rupees 21,058 crore. That's a reduction of 41% from rupees 50,839 crore in H1 FY rupees 29,781 crore in H1 FY21. The sales revenue in current half year has been lower, mainly on account of decrease in sales revenue from crude oil and natural gas. That's to the extent of 15,324 crore for oil and 4,179 crore for gas, respectively. Sales revenue from value-added products during the current half-year period has been lower by 2,041 crore. Also, there is a reduction in Government of India's share of profit petroleum by rupees 486 crore from 948 crores in H1 FY20 to 462 crore in H1 FY21. The decrease is mainly at RJON 90/1 and CVOS2 blocks by rupees 196 crore and 187 crores respectively. The billing net of VAT and CST for crude during the second quarter of the current fiscal was at rupees 41.38 per barrel as against US dollar 60.33 per barrel in the same period of the last year. That's a decrease of US dollar 18.95 per barrel. That's and percentage terms, it is around 31% reduction. The average exchange rate of rupee, however, stood at rupees 74.39 vis-a-vis 70.34 in the corresponding in the second quarter of FY20. Thus, the realization for crude oil in rupee terms stood at rupees 3,078 per barrel in Q2 FY21 vis-a-vis rupees 4,244 per barrel in Q2 of previous fiscal, which amounted to decrease of around 28% in INR terms. Similarly, billing net of VAT and CST for crude during the first half of the current fiscal was at US dollar 34.97 per barrel as against USD 63.26 per barrel in the same period of the last year. That's a decrease of US dollar 28.29 per barrel, and in percentage terms, this decrease translates to about 45%. The average exchange rate of rupee versus dollar stood at rupees 75.07 vis-a-vis 69.96 in the first half of previous fiscal. Thus, realization for crude in rupee terms stood at rupees 2,625 per barrel in H121 vis-a-vis rupees 4,426 per barrel in H1 FY20, which amounted to decrease of 40.7% in INR terms. During Q2 FY2021, the statutory levies stood at rupees 3,936 crore as compared to rupees 5,861 crore in Q2 FY20. That's decrease of rupees 1925 crore, and this is a reduction of around 33%. The decrease in royalty on crude oil 7 crore and cess by 876 crore is mainly attributable to decrease in average selling price of crude oil from rupees 31,718 crore per MT, rupees 31,718 per MT in Q2 FY20 to rupees 22,988 per MT in Q2 FY21. Similarly, there has been decrease in the royalty on natural gas by rupees 206 crore on account of decrease in price of natural gas from rupees 10,760 per 1,000 cubic meters in Q2 FY20 to rupees 7,273 per 1,000 cubic meters in Q2 FY20. Statutory levies have also decreased by rupees 5,180 crore, that is a reduction of 43% from rupees 12,097 crore in H1 2020 to 6,917 crore in H121. The decrease in royalty on crude oil by rupees 2,365 crore and cess by 2,430 crore is mainly attributable to decrease in average selling price of crude oil from rupees 33,102 per metric ton in H1 FY20 to 19,650 per metric ton in H1 of this fiscal. Similarly, there has been a decrease in royalty on natural gas by rupees 456 crore on account of decrease in price of natural gas from rupees 10,646 per thousand cubic meters in H1 of previous fiscal to rupees 7,254 per thousand cubic meters in H1 of this fiscal. The operating expenditure has decreased by rupees 394 crores. That's a reduction of 8% from rupees 4,922 crores in Q2 of previous fiscal to 4,528 crores in Q2 of this fiscal. The decrease in this year Q2 is mainly on account of decrease in consumption of materials, rupees 154 crore, mainly at the Dahej plant by rupees 113 crore on account of decrease in price of spot LNG, repair and maintenance 129 crore, decrease, and mainly at Mumbai offshore, and water injection by rupees 92 crore. Similarly, the operating expenditure in H1 of this fiscal has also decreased by rupees 1021 crore. The reduction in H1 FY21 is mainly on account of decrease in consumption of materials, rupees 397 crore, mainly at the Dahej plant by rupees 324 crore on account of decrease in average spot LNG price, repair and maintenance 230 crore, workover and water injection by 144 crore, and manpower expenses by 127 crore due to major superannuation separation in the last 1.5 years and decrease in other staff-related expenses. The finance cost has also decreased by substantial amount, and that is by rupees 365 crore from 682 crore in Q2 of previous fiscal to 317 crore in Q2 of this fiscal. Similarly, the finance cost has decreased by rupees 519 crore from 1328 crores in H1 of previous fiscal to 809 crore in H1 of this fiscal. This decrease is mainly on account of decrease in short-term loans and commercial paper borrowings. DD&I cost of Q2 FY21 stood at rupees 3679 crore as against rupees 4578 crore in Q2 of previous fiscal, a decrease of 899 crores, and in percentage terms that's 20%. The decrease in DD&I is mainly due to decrease in depletion by 297 crores and impairment by 665 crores. The decrease in depletion is mainly at Mumbai offshore by 305 crore due to upgradation of reserves. This decrease has been partially offset by increase in depletion by 118 crore due to downgradation of reserves at Assam asset and few other onshore fields. There was a reversal of impairment on account of write-off of few wells in the frontier basin. Similarly, there is also a decrease of rupees 814 crore, that is around 9.8% in DD&I cost during H1 FY21 from rupees 8,316 crore in H1 20 to 7,502 crore in H1 21. The decrease in H1 FY21 is mainly attributable to decrease in depletion by rupees 642 crore and impairment by rupees 318 crore. The decrease in depletion is mainly at Mumbai offshore by rupees 787 crore due to upgradation of reserves. The decrease has been partially offset by increase in depletion by rupees 250 crore due to downgradation of reserves at Assam asset and other onshore. Considering the possible effects of low crude oil and natural gas prices, an impairment assessment has been made in terms of Ind AS 36. Based on the assessment, the company has recorded an impairment loss of rupees 1,238 crore for the quarter and half year ended the 30th of September 2020 and has disclosed the same as an exceptional item. There is a decrease of rupees 152 crores, that is 9.5% in exploration costs written off, survey and unsuccessful well cost in Q2 FY21. That is rupees 1598 crore in Q2 FY20 to 1446 in Q2 of this fiscal. Similarly, during the first half of this fiscal, there is also a decrease in exploration cost written off, survey and unsuccessful wells by rupees 1,355 crores. That is a reduction of 34.5% from rupees 3,928 crore in H1 of previous fiscal to rupees 2,573 crore in H1 of this fiscal. There is an increase in exchange gain by rupees 783 crore from an exchange loss of rupees 371 crore in Q2 of this previous fiscal to exchange gain of rupees 470 crore in Q2 of this fiscal. So the 783 is total of 371 plus 412. Similarly, there is an increase in exchange gain by rupees 756 crore from an exchange loss of 338 crore in H1 of previous fiscal to exchange gain of 418 crore in H1 of this fiscal. The company at consolidated level has earned a net profit of, that is profit after tax of rupees 5,801 crore during the second quarter of FY21 as against rupees 5,560 crore during the second quarter of FY20. That's an increase of rupees 241 crore and in percentage terms, it translates to an increase of 4.3%. I may add that, in these very difficult times for oil and gas industry, both upstream and midstream and downstream, I think the benefits of integration for the group have already paid off, and as a demonstration of that can be looked into, these figures need to be looked at as a demonstration of that. This increase can be mainly attributable to our subsidiaries which have performed better, including HPCL, MRPL and OVL. Similarly, the company at consolidated level has earned a net profit, that is profit after tax of rupees 6,891 crore during first half of this fiscal as against rupees 12,680 crore during H1 of previous fiscal. That's a decrease of rupees 5,969 crore and in percentage terms 46, it amounts to 46%. This decrease is mainly due to lower to the group profits mainly by ONGC and OVL. So upstream, as a matter of fact, has been affected disproportionately due to this pandemic. Well, friends, with this I finish my briefing of the second quarter results of financial year 2021. We'll be very happy to take questions from you. We would request you to restrict your queries on financial results only. I may add as well that as we are living through the pandemic, please take care and stay safe. Thank you very much.
Thank you so much, sir. With this, we will open the floor for Q&A interactive session. Participants, if you wish to ask a question, you may please press 0 and then 1 on your telephone keypad and wait for your line to be unmuted. I'll repeat, you need to press 0 and then 1 to unmute your line. First question of the day we have from Abri Hazarika from MT Global. Your line is unmuted. Please go ahead.
Yeah, good morning, sir. I have got 3 questions. The first one is relating to the status of KG 98/2. So we knew that it would be taking something like 6-7 months for testing. So what is the current status and what is the current level of production from the block?
Yeah, go ahead. You could.
Okay. And the the second question is relating to the panel that the ministry has formed regarding APM gas pricing reforms. So any update you can give regarding that? And third question is your thoughts on now that OMPL MRPL merger is almost on the way. Your thoughts on HPCL MRPL merger and overall consolidation of the downstream business going forward for ONGC.
So let me take in reverse order.
Yeah.
And my friends, Mr. Gupta will reply on KG 98/2. So as far as OMPL MRPL is concerned, both the boards, that is MRPL board and the ONGC board, have already approved it. Required submissions to stock exchanges in this regard have already been filed, so it's a public knowledge. As you would recall, during AGM, our chairman had indicated that this also clears the deck for larger integration, which means that eventual integration of HPCL with the MRPL. And pending, the structural integration, actually already actions are in hand. And very active interaction is happening between MRPL and HPCL, so that even with the constraints of structural parameters, both the entities work as a cohesive group, and the synergy of almost 1:1 relationship between refining and marketing is achieved. Benefits of that are starting to be seen, and two companies are bidding together in bulk business, and in a couple of cases they have won it. Coming to your second question, as far as APM pricing is concerned, we also are aware that a committee to this effect has been formed, and the report of that committee, I understand, is in making. So it will be difficult to share beyond that. But what you can see that with the kind of pain the upstream has gone through, it is quite likely that the upstream companies can look forward to a pricing mechanism which compensates them for the cost in the minimum and allows them also to capture the upside from the higher prices in market. Now, what shape and when these things will come, it's very difficult to guess at this stage, and I may not be able to share more than this. As far as KG 98/2 is concerned, while my colleague will supplement, these are the projects which is affected adversely by the disruption which has happened in international supply chain. Given the current status, it is very difficult to say exactly pinpointing the date on which it will start giving the full production. Now I'll ask Mr. Rajarshi Gupta or his colleague to supplement on this if there are some specific timelines.
This is Rajarshi. Thank you, sir. Very correctly said, sir. What happened when the pandemic broke out, we immediately saw the disruption of the global supply chain, and 98/2 involves international vendors, international experts working on the field. So the international global supply chain was disrupted. Force majeure was invoked by the vendors, and as a result, work got suspended for some time. Now, as the unlock started happening, we are discussing with the vendors in a collaborative how to expedite this, but we do believe there will be some delay. And first gas from one well initial testing we have started on 5th March, but that we have suspended because of low offtake, and the offtakers are not taking it. But the full scale first gas and first oil we do believe will come in FY22, FY23 oil and first gas and then oil. But the exact dates, as DF was mentioning, We are still working with the vendors, and as things normalize, we will try to expedite it and bring it online at the earliest.
Okay, so just a follow up on two of them. So you said you maintain the production guidance from that asset, right? Around 15-16 MMSCMD of gas and close to like 60,000 barrels of oil per day. And what would be a realistic estimate of like hitting that kind of a plateau or peak? I mean, 1 year, 2 year, anything of that sort?
So if I may chip in, as far as the production capacity and the peak, there is no change. Only the timelines may shift a little bit from here to there.
Okay, so any realistic timeline for hitting this plateau?
No, we will not like to hazard a guess at this stage. We are in discussion, and exact timelines we would know, because guessing today and then being we would rather like to do it after we have informed discussion with the counterparty.
Right.
But it will be smaller. I mean, now that the international supply chain is in place now, virtually restored. The only unfortunate invisible is that if so-called second, third, or fourth wave, how does it affect further? Hopefully, things have changed materially over the last 10 to 15 days with so many vaccines suggesting very successful track record. So relying on that, I think it should be sooner than later.
Right, sir. And on the OMPL, MRPL, HPCL merger, so you said that HPCL and MRPL has been already, they are like working together in terms of sourcing and other things. So we already are, even including OMPL for that matter, so we are already seeing synergies between the three parties, right? Or is there something more to be gained after the official integration of this company?
I'm sure you know it, having legal structures also put their own constraints. When the entities are different, there are a lot of, let's say, leakages in the process. Other than those, efforts are being made. While sourcing is, just to correct you, is not being done together as of today, but a lot of input is going through, back and forth as far as what products to produce, what is going to be the product mix during a particular month or quarter. So a lot of coordination at ground level is happening, and MRPL is trying its level best to meet the requirements of HPCL, and so is HPCL trying to accommodate the product state of HPCL. As far as OMPL is concerned, OMPL and MRPL, OMPL is in SEZ, and MRPL is out of SEZ. There are certain inefficiencies because of that structure. So other than that, both the companies were more or less operating on through close interaction, and hopefully that process of integration will improve further once actually the call on this structural reorganization is also already taken.
So it will be a complete merger, or it will be 100% owned subsidiary, OMPL for MRPL?
It will be a merger.
It will be a merger. It's a complete merger. Okay.
Yeah, it's a stages actually. So it will take some time, but it will be a merger.
Okay, so thank you so much and all the best.
Have a nice day.
Yeah, thanks.
Thanks for your question. Next we have Latifa Gupta from Bank of America Securities. Your line is unmuted. Please go ahead.
Thank you. Good morning, sir. So firstly, just wanted to know your capex guidance for the year and next year, and also 1H spent.
So actually, when we started the year, we had anticipated our capex to be of the order of around 32,500 crores. When pandemic came, we had a review as to what was realistically possible at that stage, and I'm talking of April-May timeline. we thought that capex would be of the order of around 26,000 crores or so. Now that situation has improved, we believe that we will be higher than 26,000 crores and closer to the initial estimate of around 32,000 crores for this year. So it could be somewhere around 29 to 32, maybe 30 or 32. That's what is a likely figure for the current year. As far as the next year is concerned, we are in process of recasting the figures, and within a month or so we would have the recast estimates. Prior to the pandemic, we had anticipated our capex to be of the order of around 32 to 33,000 crores only. But post COVID, we will take a review, and hopefully in another 15 to 20 days, we would be clear about the exact figure with which we will be going for the year 21-22.
Got it. And sir, the second question is on OVL acquiring 13.7% in Senegal offshore field. Sir, any timelines and what kind of potential are we seeing from that?
So I'm sure my colleagues from OVL also are there on the call. You would have tracked the field, and one of the fields in which future phases of the project are being undertaken has been declared as discovery of the year by Wood Mackenzie. So it's a great asset, and as a group we are very proud and happy to go into this. We do anticipate that it's a question of documentation and all which will take place. So my colleagues from OVL are there. If they want to add anything to this, they may. Nirmal, if you want to add anything.
Good morning, everyone. Good morning, sir. Just that the timeline that we are aiming at presently would be somewhere to close the deal by end of January, if all goes well.
Was it audible, sir?
At least I could hear. I don't know whether the others also
Sir, is this question done, sir?
Yes, thank you.
I believe yes.
Okay, fine. So next question we have from S. Ramesh from Nirmal Bang Securities. The line is unmuted. Please go ahead.
Good morning, Subhash ji and gentlemen. Thank you very much.
Morning.
Yeah. So on KG 98/2, can you share with us what is the latest updated capital cost and the break-even gas price you require on your peak production?
See, the KG 98/2, we shared about the project progress and timelines a little while ago. I'm sure you would have heard that. Pandemic has thrown the schedule a bit out of gear, and we are trying to ascertain exactly when we can start it. As far as production potential and capacity is concerned, we continue to maintain the same level as we have done previously. Break-even cost I don't have readily available with me as at present, but it cannot be materially different from where we started. And since the project is likely to be completed at a lesser cost than what was anticipated at the time of approval.
So what is the updated capital cost?
Rajarshi, do we have immediate basis the cost available?
Yes, sir. I would just like to add 2 points. So we are below our sanction and estimated cost as we are going into 98/2 at this stage. What the board has sanctioned, and we are below that. And on the price, as you say, that we had done a tender in December for a small quantity of gas from our first well. And because this has marketing and pricing freedom, we got very good rates. So we are confident that once this gas flow starts, we can tender it out and we will get good enough rates to break even. The break even part I would not like to discuss at this moment, but 2 points. Yes, we are within our capital cost, and we have the freedom to market this gas at the right price.
And we had significant margin as far as capex is concerned.
Okay. Now, coming to your first half results and the outlook, say, for this quarter and next quarter, you've generated a lot of cash, about 10,000 crores. And at $40, your results are reasonably good, although it's down YOY. So even if the gas prices are not revised, can we expect the current quarter and the second half to be better than the second quarter results? And going forward, if there is an improvement in oil prices, would we see the earnings going back to near pre-COVID levels?
See, while we will not like to sound very futuristic, fact of the matter is, by all accounts, worst is behind us. We got something like 28 to 29 in first quarter, got around 41 in second quarter, and average of 34. So things can only look better from here. As far as physical performance is concerned, given the fact that all our operations are in open areas and where threats of pandemic like situation are far more than some of the other operations, we have done, the ONGCians have done tremendously well. I must acknowledge the significant efforts put in by our workforce, our colleagues in the field, actually who have seen to it that we maintain the production level where we had anticipated it to be. There was some hit in gas, but it was less to do with our ability to deliver, more to do with GAIL's capacity to offtake. So from that perspective, it is a tribute to the tremendous contribution of all ONGCians. As far as cash is concerned, I think pandemic is teaching all. And in the process has taught us also, as you rightly captured, we have conserved around 10,000 crores or so. We do anticipate the things to get better, and in the third quarter onwards, or second half actually, we believe the performance will improve considerably.
Just one last thought. What is the reason for the reduction in the exploratory well costs coming down? Is it because of the overall cost of equipment coming down, or is there a reduction in the drilling activity? And how do you see the pace of drilling activity going forward?
So, one is the cost had come down, that is for certain. The kind of contracts we did it in end 2019 or early 2020, they were at a significantly reduced level. As far as activity is concerned, there has been a bit of a reduction in activity also, which we are already trying to catch up. So large part of it will have to do with the reduced cost. Actually, there has been reduction not only in this front, there has been reduction on operating expenses, etc. also. So which have come down by around 10 to 11%, which is very, very significant considering the kind of squeeze you feel because of the lower realization for the products.
That was helpful. Thank you very much, sir, and all the best.
Same to you. Thank you. Please stay safe.
Thanks for your question. Before I'll go ahead with the next question, I'll announce again. Participants, if you have any questions, you need to press 0 and then 1 on your telephone keypad. Next, we have Rohit Ahuja from BOB Capital. Your line is unmuted. Please go ahead.
Hi, sir. Thanks for the opportunity. So I had two sets of questions. First is on the kind of current gas prices that you're realizing across assets. We know APM prices were reduced 120% in October, but you also mentioned that KG 98/2 production is a track-free pricing, and that will be through tender basis. So if at the current stage, if you were to get market-linked prices, what sort of prices would you get, and how different it would be compared to the APM price? And second question is regard to OVL. We've seen the share of profit of equity in in that number that is just below your revenue line or reduced drastically from last year in H1 FY21. So can you explain that reduction in that cost?
Rohit, I did not get your question about OVL.
So OVL, the financials that you give in your release, the second line is share of profit of equity in your assets, and that quantum has come off to 117 crore in the H1 this year compared to 547 crore last year. So you could explain the sharp reduction in that would be helpful.
Okay, so taking the first one first, I see current, you know the gas pricing formula, Rohit, very well, and
yeah,
it's a couple of hubs which are surplus hubs in terms of gas prices are factored in for the purpose of arriving at the gas prices. Consequently, the gas prices from 1st of October are terribly depressed and much will lower the cost. There is no secret about it. What kind of prices one would get? Now that's a tricky one. You would, the people on the other side of call would know equally well or if not better. But the reality remains this country today consumes gas at 53% of it is LNG. If that is the scenario, I'm sure the industry and the consumers should look at that as a relevant reference when it comes to what kind of prices one would get for its molecules. I'm not saying
close
exactly
to spot LNG price or long-term LNG price. I mean, if you were to tender rest in the market right now, X quantity of gas, would it be close to the spot LNG price that you get, or the RAS gas price?
I mean, let also look at that. If you look at spot LNG prices also, so that would work out to somewhere around 6 ungasified, and delivered price would be in the range of 750 or so in the minimum.
Yeah.
Spot prices have a problem because in September, they were below 3. And today, I've not seen it today, but they are already more than 100% increase since then. So I don't think exact spot prices are the relevant reference. Relevant reference would remain something like, Qatar price, as you very rightly said, which is a long-term and for a very, very substantial quantity. So that can be seen as a reference. Now, whether you get exactly that or you get a premium for domestic gas or a higher level of assurance or some sort of discount, that's a question which market decides. But that is the right reference.
And that is what apparently is being proposed for new APM price also, the formula that it should be linked to something similar formula like Qatar?
No, I can't say anything, Rohit. Actually, what is proposed and what comes out will only time will tell. But I think this is the right reference one can take on a long-term basis. Now, whether somebody will be able to do it on immediate basis or not is a very difficult thing to say. That's premature to anticipate. But I mean, these are the same molecules. So why they should fetch a different price? Or now intermediate, whether one jumps to that kind of situation in one go or it is a phased kind of movement, very difficult. It's for the artists to take the call.
So just linked to that question, so if you were to get a $5 price for all your incremental production, would it be profitable enough for you to continue investing and increase production from your assets, or you would wait for a better price?
No, incremental. There's the question of getting only for incremental. Incremental part is already there. It's a free pricing. So it's a question of, nomination field because it's not only a question of return on incremental. It is what one makes on entire portfolio, including the nomination gas. So expectation would be to get a better price on nomination gas, which gives us ability to invest.
Right.
As far as marginal or new gas is concerned, that in any case is free pricing, so there is no issue on that.
There you don't have any concern from the new production.
See, there you don't have, and we are in this industry, so that's a business risk. When prices come down internationally, that's a business risk you take, and any company in the business will have to accept that part of the risk. So, and we are well geared to meet that. That's not an issue. We can easily withstand the volatility, and as has been demonstrated by ultra low prices in first quarter.
Right.
As far as OBL is concerned, I'll leave it for my colleagues to answer, but largely it is to do with lower realizations in the relevant period. Chandrasekhar, if you may like to add something.
Yes, sir, this is Nirmal here, and as you rightly said, it has to be lower realizations. Basically, a major contributor to the share of profit of equity accounted investees comes from Vankorneft, and that is majorly an oil field, and the oil prices have directly impacted it. So, on year-on-year basis between the two half years, GST Vankorneft profit has dipped from around close to 500 crores to a little less than 150 crores in this half year, and that is the major reason for the difference that you're seeing in the contribution of equity accounted investees.
Good.
Right. Thanks for this, sir. That's very helpful, and best wishes for the festive season to all of you. Thank you.
Thank you. Same to you.
Next, we have Pinaki Parekh from JP Morgan. Your line is unmuted. Please go ahead.
Thank you, sir. Good morning, everyone. So my first question is, if you look at ONGC standalone interest costs, they stand at nearly 11 to 12 quarter lows. Now, when it comes to the debt payment of regarding the HPCL stake purchase, so where are we and how will the interest cost trend from here? And my second question is, sir, when we take the broader picture of the HPCL MRPL merger or potential merger, are there any legal issues, challenges, regulatory issues which would preclude an outright merger of those two entities, and we'll have to live with integration only in terms of operation?
No, so I take the second one first. I don't believe there are any obstacles, legal challenges of the order which are insurmountable. There are certain formalities to be completed which can be done easily. I don't think there is any issue on that part. As regards the financing cost, I'll request my Chief Commercial to chip in. But what we have done during the period, let me tell you that we have gone in quite imaginatively to source funds from the sources which are actually very cost effective. And we have also raised as low as less than 3.20% cost also through commercial papers. Now, those were kinds of things. CP was something which we had never tried in the history, but difficult times teach you a lot. So, we have started utilizing all possible options, and slowly, as my colleague could also share, that we are tending to convert all our borrowings which were of short-term natures into relatively medium to long-term, so that the little bit of balance is also restored. At ONGC level, actually, we were relying heavily on short-term instruments for purpose of funding our staff. So, Mr. Chaturvedi, if you might like to add.
Yes, I think. Thank you very much. I think you have sufficiently explained this phenomena. What is happening is that the interest rates have been staying low, and a majority part of our short-term funding has been by way of FCNR, FCPL funding, which has been linked to LIBOR. So we end up paying around 1% or so. So that actually results in a much lower interest cost. And as again you correctly pointed out in terms of the outlook, we have been trying to move part of our portfolio from short term to long term. In fact, we have already raised some money
And so that combined effort will finally show in terms of the direction of the interest cost, but they remain quite low. And also, let me tell you that our improvement on these credentials is not only at a standalone basis. Actually, even at consolidated basis, we have been able to bring down debt equity ratios by 5 percentage points from 0.51 to 0.46. So within a matter of 6 months. So there has been all-round improvement across the group.
Understood. Thank you very much, sir.
Thank you. Please have a nice day.
Next, we have Amit Biswari from UBS Group. Your line is unmuted. Please go ahead.
Sir, good afternoon. Sir, first of all, thanks for considering the request of the shareholders and getting one of your subsidiaries for the buyback, as well as positive direction on OMPL transaction with MRPL. Sir, given that now if there is a cash flow improvement going forward, would you consider a similar step for ONGC shareholders as well, and look for buyback given the stock price is extremely low and market cap is quite lower?
So, Amit, thanks for acknowledging the efforts of ONGC Group management. I give the credit for buyback to the HPCL management. All the inputs, including from ONGC. I'm sure it's a reassertion from the company as well as the promoters that the company's current share price is considerably lower than the level at which it deserves to be. We are actually making significant strides in terms of reorganizing the group. OMPL, MRPL, HPCL, PMHBL, OPAL, everything is in state of transition and in state of transition for the better. That I can assure you. We are addressing the structural issues across the group. You raised another question as to improved liquidity or improved financial position. What does it mean to shareholders? I think a strong group actually is an assurance to the stakeholders, including the shareholders, about the sustenance as well as its capacity to keep on paying on a long-term basis. That could be in terms of anything. I can't commit immediately as to what will be the form, but obviously one way or the other the stakeholders get rewarded as the time goes. So definitely a revitalized group actually means much better capacity to service the stakeholders.
Okay, thank you, sir. And sir, my second question relates to the gas price hike. So I understand that committee has been formed, and but do you think that the progress on this matter has been considerably slower than expected, while the importance of this matter is quite high? So what's the reason that government has been talking about gas-based economy, but we have not been able to sufficiently reward the upstream companies which are engaged in the production of gas? So why there has been so much disconnect in the policy making? Like we have not seen any positive steps like natural gas and the GST or any other steps. So why there is so much disconnect for the upstream guys versus the downstream guys?
So I don't see the disconnect. You have talked about also of delay. I think it's a question of perception. While the situation is challenging for upstream and wrestle, but at the same time I believe, and I can't speak for the government, but I think government has to balance so many things. We have received tremendous support from Ministry of Petroleum and Natural Gas when it comes to the revision of prices or issue of inclusion of gas in GST. In fact, on a couple of occasions in the past, we have believed that it is around the corner. Hopefully, it is the right time actually that this ATF and GST should be included in the ATF and gas should be included in GST in the minimum, if not all the 5 products. So, and ministry is seized of the matter. I believe they must be working with the right authorities to get it done. It requires actually tremendous consensus within the country to actually make that happen. And the ministry seems to be working on that. Gas price.
Would you put any timeline? Yeah. No, timeline for the gas price hike?
I wish I knew. I wish I could. It is for them to do.
Yeah, right, sir, right. Okay, sir, thanks a lot. And sir, wish you a happy Diwali to all the team of ONGC and to everyone on the call. Thanks a lot, sir, for taking my question.
Thank you very much. Happy season of festivities, and please stay safe.
Thank you, sir. Thank you.
Next is Vikash Jain from CLSA. Your line is unmuted. Please go ahead.
Thanks, Subhashji, for taking my questions. I had a question on OPEX. So firstly, what is the element of forex gain, and has that been adjusted with, has that kind of gone down to reduce the reported OPEX number for this quarter?
Can you repeat the question? What has been the element of?
Forex gain, sir.
Forex gain. So let me tell you, if I were to talk of couple of elements, for example, staff expenditure, we are down by around 10%, workover operations, costs are down by around 5%, water injection, etc. is down by more than 15%. Consumption of raw material, obviously, this is largely a function of, what we consume in C2, C3 plant is down by 30%, and that's largely to do with international gas prices. Transport expenses down by 10%, insurance marginal increase, repair and maintenance, down by 25%, partly because of maybe lower activity as well as the lower contracted prices. Hiring charges, etc., down by close to 10%. Other production expenditures, actually, hiring has gone up by around 10%. Other production expenditure is down by 12%, and CSR is up during the year because of what we ended up paying in the beginning of the year. There is reduction in unallocable week costs, etc., and also the administrative overheads, etc. So this is what has translated into the reduction. Actually, most of expenses are of, they do not have a significant contribution from foreign exchange gain in this.
Okay. So the other question was on account of, the capex numbers that you have you're guiding for. Clearly, our free cash flow would not be good enough to kind of support that. Our operating cash flow would not be good enough to support that kind of capex. And to add to that, there is demand from the government to raise dividends. So how do we see balancing the two out? In terms of, is there any chance that dividends could be lower, particularly in a year like this, where, there will be a big mismatch between your capex and your final profit numbers?
No, we would love to pay higher dividends provided we earn. If the prices recover and we make substantial money, we would love to share. But I think from the country perspective, softer oil and gas prices are good. Whatever is the, we are in a very tricky situation as a company because if oil prices stay low, it hurts us as a company, but as a country, this brings down the import bill substantially. So I think we are the ones who can't even pray that the prices should be higher. Having said that, we are mindful and we would like to keep investing on the projects in case we do foresee the right prices for the products. Right now, these are at ultra low level, but notwithstanding that, we are looking at our project pipeline to see what projects can be formulated and set in motion at this stage. Dividend, that has been a discussion over the last couple of years, and we'll see where we end up after the third quarter, and then the call will be taken with full consultation with the relevant authorities. It involves all stakeholders. So at that time, the call will be taken.
So one other thing, Shivaji, this is regarding the merger that you just kind of hinted to, that is possibly eventual merger of HPCL with MRPL. Now, firstly, this buyback and then the merger. Now, in case of MRPL, you own about 72% over there, which is much higher than what you own in HPCL. So if it's a pure merger, then your stake in HPCL goes up even further, and because you'll be issued HPCL shares. And then because of the buyback, your stake goes up even more. So is there a plan to eventually, if prices don't recover, to delist HPCL or something?
No, we have not thought that long. The company has done well. Company, if you really look at compared to its peers also, HPCL has done a great job. Its first quarter results are truly impressive, and in fact, it is on account of the significant contribution of HPCL that our first half results are better than the results for the group on a Q2 of H1 of previous fiscal. So there is no question or no thinking on delisting HPCL at this stage. As we go along, we'll start kind of formulating a clear strategy as to how to go about it, but the lines have been drawn in the sense of direction. In sense of in terms of timeline, they will happen because first OMPL, MRPL has to happen. Then one has to take a pause and then start discussing specifically on the other proposals. But direction is clear as to where we want to go.
Okay, sir. Thank you so much.
Okay. Please have a nice day.
Next we have with CICI Securities. Your line is unmuted. Please go ahead.
Yeah, thank you. Good afternoon, sir. My question on gas pricing. So you did mention earlier that you are hopeful of a gas price which is covering your cost. So you are effectively, I guess, based on what you said in the past, looking at a gas pricing of over $3.7 per MMBTU. And you can be assured of getting a price which covers your cost only if there is a floor pricing, and that's what been the news flow also. So are you expecting a floor price kind of a thing?
No, right now actually it is in, I believe the committee is still to finalize its report. All such permutations and combinations are being heard about. I'm not very sure as to what eventually the committee recommends and then what eventually gets decided. But what I do believe that if, at the end of the day, the fair formula would be one, which compensates the upstream fairly for the investments made historically, and also, gives them ability to generate funds to invest further. Because India does not have luxury of too much of oil and gas. So I think there is a necessity to build the capacity of domestic players if one has to even attract the foreign investors. From that perspective, even for nomination gas, the right remunerative price makes sense, which does not necessarily only cover the cost, but also gives some upside.
And your cost is 3.7, isn't it, sir?
Hello?
Cost is $3.7 per MMBTU.
I missed part of it.
Pardon me?
I missed part of it.
No, I'm asking you, your cost is 3.7 as you have stated in the past dollars. So only if the price is above that, you start making some money.
Yeah.
Yeah. So secondly, how much? So I presume that you have the full support of your ministry, but I think the decision will depend on what at the highest levels. So are you hopeful that at the highest levels this is now likely to be more positively? Because I think you've been trying for a floor price for almost 4 years, over 4 years now, I think, since your price went below 4.2. So are you hopeful, and is the fact that a committee has been set up a positive indicator that even at the highest levels they are considering that the formula needs to change?
So I think just to set a bit of correction, as far as we are concerned, we neither look for a cap nor floor. We expect the free pricing. So the company has never favored either of them because they are inconsistent with the eventual, direction of reforms. We believe that free pricing is the right way to go. But there are several ways of reaching the end point. And one could be through a system which actually strikes a balance between two extremes and gives a floor and a cap. I'm sure, this, whole intention to move towards a gas-based economy comes out of commitment from the very, very top. So if that is the case, then ministry has the right ear. It's only a question of timing. And I believe ministry has been supportive, and their arguments this time are likely to cut ice, because now we have touched probably the rock bottom prices.
So lastly on this gas price, do you think that if there is movement change in formula, then will it come only from April, or is there a possibility that the gas pricing formula could change even before the next time when the pricing is up for review and revision?
There is an urgent requirement. Do it on tomorrow basis.
Okay.
That's only what I can say. I am not very sure when it comes.
Okay, but so it could come, though you are not sure.
I hope it comes earlier.
Okay. Yeah. Thank you, sir. Because two small questions. One on Vancor, if they could share, because I think the first half profit of 150 crores was shared, so I presume first quarter probably was a loss. What was the profit contribution of Vancor in Q2, if we could have that number? And the other small question was on if you could give us some data on the financials and the operations of OPaL.
Okay. Nirmal, if you can talk about Vancor.
Sir, presently we don't have the exact Q2 numbers. We'll have to get back on this. But for H1, H1 we have already mentioned the numbers. The Q2 exact numbers we don't have presently.
But is it likely to be higher than H1 number, Q2?
Q2 is definitely higher than both H1 and Q1 numbers. Yes.
Okay.
I mean, that's being largely oil. Actually, it has to be higher. Exact bifurcation. As far as OPaL is concerned, OPaL has done tremendously better. Again, numbers maybe Savneet will share separately. May not be readily available. I don't know whether Prakash, do we have the numbers available?
Yes, sir. For Q2, for H1 basically, the total income was 4,600 crore around, and EBITDA was at
net position. Can you tell the net position of Q1 versus Q2?
Yeah, sir. At EBITDA level, at Q1 we were 121 crore, and at Q2 we were at 632 crore, sir.
So actually, if you really look at EBITDA level, there is a considerable improvement. In fact, OPaL was one of the few plants operating even during the COVID. So it has turned out a significantly better performance. The only issue at OPaL level remains its lopsided capital structure, which is likely to be addressed in days to come.
And sir, at PAT level we were.
Yeah. Yes.
At PAT level we were only negative 65 crore in comparison to 641 crore in the first quarter.
First half or first quarter?
No, so 641 versus 65 in Q1, Q2.
Q1, Q2, yes, sir.
Thank you very much, Prakash.
I mean, it is clearly now, actually, see, despite the disruption and a reasonably good crack, it's nearly there now.
And sir, what was the utilization of OPaL? What is it operating at?
I mean, today it is operating at 100%. Actually, it started touching 100%, 102, 105 from December. Now, subsequent to that, there have been, more or less disruptions or changes because of the COVID. So, more or less, the plant is capable and has worked on sustained basis at above 100% capacity for quite a few months during this period. We had planned that during the 9 months of this year, that is when we finalized the budget from 1st July, it will operate at 105% capacity. While 105 on 9 months basis may not be possible, but it will be close to 100% or so as far as these 9 months are there. It is already doing close to 100% these days.
Thank you, sir. Thank you to you and your team, sir, for answering all the questions. Thanks a lot.
Yeah, thanks, Sabnis. Please have a nice day.
Yeah.
Next we have Varad Ranjan from Systematic. Your line is unmuted.
Thank you. Sir, on the impairment front, you had mentioned a number. Was it all gas or there were some oil assets also under impairment?
So it was largely gas. Oil has improved. The 1238 is only gas. Sanjay, can you confirm exactly?
Yes, sir. It is entirely on account of decrease in gas prices.
Yeah.
And secondly, on marginal fees, what is the updates in terms of monetization efforts?
Can you really repeat your question? What exactly you want?
On the marginal fields, what is the effort to monetize any program on tendering?
Yeah, so the process was started and there was some response. Exact numbers because we do not have the relevant team here. But there was a response and the process of finalizing the contracts, etc. is going on. I mean, as you are kindly aware also that during this period the prices have come down drastically. So maybe there is a little bit of, reluctance on the parties to go ahead on an immediate basis.
Thank you, sir. Thanks.
So, next question we have from Bhavin Gandhi from BNK Securities. Your line is unmuted. Please go ahead.
Thank you for taking my question, sir. Most of them have been answered. Just two questions from my side. One is the restructuring that you alluded to within the group. In that scheme of things, do you believe HPCL will be the nodal company which will have all the downstream assets? So the other downstream assets of the group can also be divested into HPCL at some point in time, or that's not the case?
So if you are adding, something like we have PMHPL, we have OMPL, we have MRPL, I think it logically could eventually make a lot of sense to align them with the HPCL.
I was referring to OPaL particularly.
No, so as far as OPaL is concerned, if you really look at it, it is no different from our Dahej and from our Dahej, Hajira and Uran complex. Actually, virtually there is 100% relationship between the feedstock coming from upstream and the end consumer. So they should have always been as part of ONGC, and eventually I think that may be the way to go ahead. It has little or no relations with HPCL directly.
Sure. Got it, sir. And sir, second, just a clarification. You mentioned the impairment is relating to gas only. So are we penciling in the current gas pricing in our impairment charge, which means that if there is a reversal, it can be reversed?
Yes.
All right. Yeah, thank you so much. Those are my questions.
What we have taken, because they are already mandated, they apply for 6 months. We do anticipate a revision, but we, as a more conservative approach, we have adopted those prices for the purpose of calculating the impairment.
Great. Thank you so much.
So the last question of the day we have from Sumit Sarkar from Capital Mind. Your line is unmuted. Please go ahead. I'll repeat. Sumit Sarkar from Capital Mind. Your line is unmuted. So there's no response, sir. Throw the floor back to Subhash, sir, for final remarks. Over to you, sir.
Okay, so thank you very much. I think we greatly appreciate everybody for being there and discussing. May reassure that anybody having any question at any time can ask and approach our team, approach me for the any clarification you want. I would only like to conclude by saying that we have been through some very difficult times. Difficult times have also taught us how to survive, and ONGC has, as a group, come out with flying colors during these times, and a demonstration of that is that our Q2 performance on a group basis is much better than the comparative performance of last year. So the economy worldwide and in India is reviving. So we are past the worst, and hopefully the things will be smoother on a going forward basis. We greatly appreciate your questions, inputs, suggestions, and if there is anything, please get back to us. Thanks, madam, to you also for valuable time and for organizing this. And thanks to the entire, I think through call, I once again, acknowledge the significant contribution of our employees in this very, very difficult time. They have actually, put in tremendous efforts. Some of them get noticed, some of them are not noticed. Yet they have silently seen to it that our operations continue unaffected. Thanks to the team, and thanks, madam. Thank you very much.
Thank you so much, sir. I would like to thank all the speakers for the presentation, and I would like to thank all the participants for their valuable time. You have a great day. You may all disconnect.